Beginners in crypto trading. The cryptocurrency market has already established itself as the most volatile market. We have seen new highs for major coins, the growth of decentralized banking, virtual real estate, NFT, and decentralized versions of well-known platforms in the last year. Following the market downturn in May, user sentiment about cryptocurrencies was divided. More seasoned traders were prepared for the downturn, whereas newcomers and enthusiasts lost money and quit the market in rage. In this video, I will attempt to explain all of the nuances of trading on the cryptocurrency market based on my personal experience and understanding. Spot cryptocurrency trading versus derivatives. Today, exchanges and marketplaces provide a plethora of trading instruments for the Bitcoin industry. Different contracts, such as spot and derivatives, are available on cryptocurrency marketplaces. The actual acquisition of an asset is a significant distinction between trading on the spot market and trading on the derivatives market. For example, when trading on the spot market, a person obtains an asset with the intention of selling it later to profit from a price differential. Trading in the spot market is similar to trading in the stock market, and anyone who trades in this market is called an investor. To fix profits on the spot market, you can place only one order, a sell order, and a buy order by putting the amount of the asset purchased or sold. Coinbase, Kraken, Gemini, and Binance are the most popular exchanges for spot trading. In contrast to the spot market, when trading in the derivatives market, a person does not actually acquire an asset but instead opens a position for the purpose of price speculation, and a person dealing in this market is referred to as a trader. Trading in the derivatives market has the advantage of being able to earn even if the price of an asset falls, which is similar to trading contracts for differences, CFDs, and trading futures, also a class of derivatives. Derivatives trading platforms offer very high leverage, allowing a trader to raise his capital and gain significant rewards but simultaneously posing the risk of losing all funds in the position. It is also crucial to remember that when trading on the derivatives market, a trader can create various orders to make a profit or accept a loss on the trade, take profit and stop loss functions. That is, because the asset is not actually purchased, two orders can be placed at the same time. The advantage is that if the price reverses, the trader may close the position with a minor loss, and if the price continues to advance in the projected direction, the trader may end the position and set the profit automatically. Popular crypto derivatives exchanges and platforms include FTX, Bybit, Overbit, and BitJ. Market research and education. Price movement can be predicted using a variety of techniques, including technical, fundamental, and market sentiment analysis. Technical examination. The most widely used sort of market analysis, which includes the examination of asset price fluctuations and trade volumes. Everyone develops their own trading strategy based on technical analysis, but the most common tools are Dow theory, Elliott wave theory, and Fibonacci mathematical tools. TradingView is currently regarded as the greatest tool for technical analysis. Fundamental examination. The study involves an examination of fundamental data such as project finance, reports on updates, deposits or withdrawals of funds to or from the exchange, the open interest ratio, the funding rate, and, if the asset is traded against a currency, economic data impacting that currency, more often the US dollar. An examination of market sentiment. The Bitcoin market's second most popular analyzing method. Market sentiment is evaluated using algorithms that scour prominent social networks and the internet for favorable and negative remarks on cryptocurrencies. These techniques are used to compute one of the most important indices, the Fear and Greed Index. Education. Most Bitcoin exchanges and trading platforms have their own training resources, although they are more basic and lack specific information. As a result, after reading materials on any sort of cryptocurrency market research, you should not consider yourself a pro and open positions that surpass 50% of your deposit. Coinbase is an excellent example of a company that provides educational materials. To begin trading after finishing the training, you can use infinite demo trading on HitBTC for spot, Binance and BitJ for derivatives, the latter offering only a few pairings but allowing the balance to be restored an unlimited number of times. Signals. For a fee, there exist organizations and traders, as well as numerous applications or indicators that sell signals. When a specific price is reached, a signal is issued to open a position or place an order. If you are ready to employ such services, do not overlook your own assessments, so you can learn how to trade yourself even faster. Copy trading. You can utilize signals to enter the market manually, or you can mimic the orders of prominent traders. Copy trading is based on the automatic opening of a position with all settings copied, entry price, take profit, and stop loss. eToro, the world's first social trading platform, pioneered copy trading in the Forex market and now offers the same platform with minor changes for trading cryptocurrency. Copy trading can also be utilized to do your own analysis, such as determining why a transaction was successful and vice versa. On the BitGet platform, which claims to have a greater copy trading turnover than eToro, it is able to view all traders in detail, analyze trading strategies and positions, which can also be used to learn market trading. Duplicate trading, like trading with other tools, has the danger of account drawdown. As a result, before subscribing to a trader to copy his trades, you should thoroughly review the history of his trades, as well as gather information about him on the internet and in social networks. Conclusion. The hazards of trading in the Bitcoin market outweigh the benefits. You should constantly have a cold-blooded approach to all market conditions. To begin, research the market, study and maybe begin using signals and replicate trading on modest quantities, but always strive for an independent understanding and analysis of the market. Study risk management carefully, and never trade more than 50% of the balance in the start. Do not be concerned about modest profits, a modest profit is preferable to a loss. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.